Most people lose money in crypto long before the market crashes because they risk too much, too early. At the beginning, everything feels exciting. People see screenshots online, huge profits, fast gains, and slowly they begin believing that success comes from taking massive risks. So they go all in, not because they understand the market, but because emotions start controlling decisions. Fear of missing out, fear of being left behind, and that emotional pressure changes everything. Because once emotions control investing, logic disappears quickly. People stop thinking about survival. They stop thinking about risk. They only think about profit. And that is dangerous, especially in crypto, because crypto is volatile. Prices can rise fast, but they can also collapse fast. And beginners usually underestimate that reality. They believe, if the market keeps going up, I will become rich quickly. But markets never move in one direction forever. Corrections happen, fear happens, panic happens, and when panic arrives, most beginners are unprepared emotionally because they risk too much. Now every price movement feels terrifying. Every red candle feels personal, and emotional pressure starts destroying decisions. People panic sell. People overreact. People lose confidence, not because the market is evil, but because they built positions too emotionally. That is why smart investors rarely go all in, because survival matters more than excitement, and survival creates opportunity. If you lose everything early, you never reach long-term growth. That is why protecting capital is one of the most important skills in investing, but beginners usually ignore this because risk management feels boring emotionally. People want excitement, fast money, big wins, instant results, but real investing usually feels slower, calmer, more controlled, because professional investors understand something important. One bad decision can destroy years of progress. That is why they protect downside first, not upside. And that mindset changes everything psychologically, because now the goal is no longer, how fast can I get rich? The goal becomes, how long can I survive? And survival changes behavior. You become calmer, more patient, more disciplined, because now you finally understand that staying in the game matters more than emotional excitement, especially in crypto, because crypto rewards patience far more than impulsive behavior. But beginners usually learn this lesson too late. They enter during hype, they buy emotionally, and they risk too much. Then corrections arrive. Fear spreads everywhere, and suddenly, people who felt confident yesterday begin panicking emotionally. That is why position sizing matters. Never risk everything on one decision. Never invest emotionally, and never believe that one trade will change your life forever, because emotional thinking usually creates emotional mistakes, and emotional mistakes destroy portfolios. That is why long-term investors focus heavily on risk management, because protecting capital creates stability, and stability creates consistency. That is the real foundation of long-term wealth. Not hype, not predictions, not emotional gambling. Consistency. And consistency becomes possible only when emotions become smaller. That is why smart investors prefer systems, because systems reduce panic, systems reduce stress, systems protect people from emotional decisions, and that matters more than most beginners realize, because in investing, survival is everything. Remember, please, security always comes first. Risk management matters more than fast profits. Protect your capital. Think long-term. And this is where most investors change completely, because once people survive their first real correction, they finally understand how dangerous emotions can become. At the beginning, everyone feels confident during green markets. But confidence is easy when prices only go up. The real test begins when fear enters the market, because fear changes psychology instantly. People stop thinking clearly. They begin reacting emotionally, checking charts constantly, refreshing prices constantly, searching for reassurance online. And slowly, emotions take control. That is why smart investors prepare before panic arrives, not after, because preparation creates stability, and stability matters during volatility. That is why risk management is not optional. It is survival. Professional investors understand that losses are normal, corrections are normal, volatility is normal. That is why they never build positions that destroy emotional stability, because once emotions collapse, discipline disappears quickly, and without discipline, people make terrible decisions. They panic sell bottoms, they chase random pumps, they revenge trade emotionally, and eventually, they destroy their portfolios, not because the market is impossible, but because emotions became stronger than their system. That is why systems matter so much. Systems create structure, and structure creates calm behavior, because now you no longer react emotionally to every market movement. You understand that volatility is part of the game, especially in crypto. That is why smart investors move slower. They build carefully, they protect capital carefully, and they think long-term, because wealth is usually built slowly, not emotionally. Many beginners misunderstand this. They think successful investors became rich from one lucky trade, but usually, long-term wealth comes from consistency, small smart decisions, repeated over time. That is why patience matters, and patience becomes easier when risk becomes smaller, because now you no longer fear every correction. You no longer panic emotionally, because your system was built for survival. That is the real power of risk management. Protects emotions, and emotional stability is one of the most valuable advantages in investing, because calm investors make better decisions. Panic investors destroy opportunities. That is why smart investors focus more on downside protection than upside excitement, because surviving bad markets creates future opportunity, and future opportunity is where real wealth is built, not during hype, not during emotional euphoria, but during long-term consistency. That is why discipline matters so much, because discipline protects behavior, and behavior creates results, especially in crypto, where emotions move faster than logic. Remember, please, never risk everything. Never invest emotionally. Protect your capital. Stay patient and think long-term.